Good evening, everybody. We're going to be kind of doing uh, kind of throwing some education in to some of these sessions, and then we'll go to the live charts, which I forgot to tell you, Jim. When I get done with the PowerPoints, we'll flip over to live. So what we're going to kind of be working on from here on in, now that it's cold and miserable outside, um, is I got a lot of feedback over the last month or two saying, telling, or people coming back and saying, yeah, I do good trades, but for some reason I'm just not making any money. Um, so there's a few pieces of, or a few elements that helped me dramatically. And I say when it helped me dramatically, you got to remember, this is all coming from the perspective of somebody that was a terrible investor, the worst investor in the world years back. And I got out of the brokerage business because I figured you just can't make any money in the market. The brokerage firms didn't know what they were doing. Their philosophy was just buy and hold long term, and you should have more money down the road than when you started. Which obviously in 2008, that didn't work out very well for a lot of people. So when candlesticks came along, it was just kind of all common sense put into the charts. So along with that, I was having the same problems when I started out. I at least wasn't losing money anymore. I was starting to make money. Um, but I was always not making nearly as much as what I thought I should be. So I went back and started analyzing what really kills us when we're trading. And the number one result pretty much is our own emotions is what kill us. So we're going to kind of do a cliff notes because what's going to be happening here is over probably at the end of this month, we're going to do a kind of a comprehensive training for people, for people and dogs, uh, for people on that want to kind of not only learn how to use the candlestick signals, but also how to control their emotions. The cats too. So the first element that really you need some big winners, yes, and that's what we're kind of going to go into here. Is the first thing that we need to do to kind of keep our emotions out of our own trading is having a system of money management. Now, this all goes back to the very logical aspect that the things that do make us money is being able to pick out which signals and patterns. And that's exactly what the candlestick analysis is. That's the whole basis of candlestick analysis. I always start my trainings off by saying prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. So if we understand that there's 12 major signals, and this is kind of the bread and butter of candlesticks, is if you want to learn the 12 major signals, because that's where you start adding the probabilities of being in the right position at the right time. Obviously, with stochastics in the oversold area, you see a morning star signal, you start adding the other elements. Did it right smack dab off the 50-day moving average, closed above the T line. That pretty much tells you the probabilities are that we're heading higher. And once we learn what the results of those signals are, we can catch those big moves, or we have put ourselves in situations where the probabilities are greatly in our favor that we're going to be catching those big moves or heading in the right direction. So as we can see, our best friend signal when we do our quantitative trainings, the best friend signal not only produces a high probability you're going to be in an uptrend, but also a very high probability that your percent move is going to be big. We also know the doji sandwich, know what to expect after that. So this allows us, again, to be in the right places at the right time. So we have those expectations of patterns. We know what the scoop pattern results are. It's that big slingshot effect coming up to the out the other side. So it doesn't matter where it's occurring. That's why we recommended AMD a few weeks back, because notice a little scoop pattern. And then we have our other analysis to tell us how long to stay in that trade. And that becomes important. First of all, we want to recognize when is it time to get in. We have our entry quadrants. Market opens higher, stock price opens higher. Market opens higher, stock price opens lower. We want to know what to do then. Market opens lower, stock price opens higher. We want to know what to do then. And if the market opens lower and the stock price opens lower, we know exactly what to do. We don't do anything. So when we're setting up ourselves to take advantage of candlestick signals, the number one element that we have to keep in mind is if you can expect 70% of your trades to be winners, which I would kind of calculate that's about the percentage that I've hit probably over the years. That's not anything quantified. And it's not telling you whether the winning trade was 0.3% or 300%. It's just a factor that if we go with what the signals are telling us, the probabilities are pretty high that you're going to be in the right trade at the right time. After you get into the trade, then you go to your next aspect of analyzing the trend, which is using the T-line or waiting for the next sell signal. Yes, this is all being recorded, so I guess if you've signed in, you can get this. So, but here's the part that had to or that I had to really wrap my thought process around, is that even though you've got maybe one of the best percentage returns or percentage correct trade ratios in any technical trading, what else can you expect? You can expect there's going to be 30% losers. So with that, if you can understand that concept, that not every trade you're going to make is going to be a winner, then we get away from the emotions. Every time, Glenn, bring up your individual questions when we do the live charts. We'll get to them all. We've got to realize that 30% of our trades are winners. So how do we keep our emotions out of our trading in that aspect? Well, the first thing I learned is if I've got a portfolio, I want to keep all my positions equal dollar amount. So let's say I have a $100,000 portfolio. I want to have 10 $10,000 positions. And that's for one very simple reason. If we've got 10 positions on and they average, we've got one that we decided is the best trade. I mean, it looks fantastic. And we normally put in, now this is the wrong screen. This is what my normal trading portfolio looked like years ago. I'd have one position with $24,000 in it, another 14, another with 4,800, another with 2, another with 16. How much time and effort are you going to put on these positions? Well, you're probably watching the $2,000 position just as much as you're watching the $24,000 position. So you're taking time and effort to take your mental processes and watch a $2,000 position, but if this went up 16%, big deal. This went up 16%, much bigger deal. So the reason you want to keep your dollar amounts even, like in $10,000 positions, is for that mental process that you want to consider each position as a unit. So if you've got a portfolio that has positions, and it doesn't have to be exactly $10,000. Let's say you're buying 1,000 shares of $11 stock, or another 1,000 shares of a stock that's trading at $9.70. That's close enough. What we don't want to do is say to ourselves, which we do, man, that position looks great. That chart looks great. This one I really think is going to go. I'm going to put 24,000 into this one versus my normal 10,000. Well, when the trading starts out the next day, where do you think you're going to spend 90% of your time watching as far as a position? You're going to watch that one. Now, what that does is you've already put your emotions or your mental process or your mental, let's say, prowess into saying, all right, this one's going to be better than the other ones. I'm going to put more than twice my normal amount into it because I think I can really hit a home run with this one. So what happens when it doesn't work? Well, a couple of days it goes down. What's the first thought that goes through your mind? Everybody's not seeing how good this one is. I'll give it a couple more days so everybody else can see why they should be buying it. And 3-4 days after you should have been out of the position, you're finally getting out of the position. So essentially, if you have $20,000, do you feel okay to have 4 positions, 5,000 each versus 10,000? Yes, Peter, that's up to each individual also. If I had a $20,000 portfolio, yeah, I might just have 4 positions on. If I've got a $750,000 portfolio, I might have 12 or 13 positions on. What we don't want to have, as darn, I keep forgetting her name, that says you should never have any more than 4% of your money in one position. That means you have to have 25 positions on. And I always give the example that there's analysts on Wall Street that are paid millions of dollars to follow 6 or 8 stocks, and they can't do that very well. Susie Orman, that's right. You recommend keeping some percentage in cash? No. Usually when I have my positions on, I'm usually 100% invested. Now, that doesn't necessarily mean I'm 100% long or I'm 100% short. In an upward trending market like we've seen, I might have 8 long positions on and shoot 2 short positions. Downtrending market, I might have 7 long or 7 short positions, 3 long positions. The advantage we have with scanning with candlestick simple scanning techniques is not every sector or every stock is going to be going up in an up market, and every stock and sector is not going to be going down in a down market. So just to kind of, I would say, kind of hedging for yourself is that you have some short positions in an uptrend, just in case things turn around. At least you're a little bit protected. Risking different percentage of account for each trade problem? No. A different percentage of the account? No, I don't. Each trade is one unit. I want to keep them all $1 or equal dollar amount. The reason for that is if this one's not working, I can rationally say to myself, all right, this unit of my portfolio is not working. Move it to something else. When I put my emotions into one, I may say, all right, this one's not working. I'll give it another day or two, which is exactly what you shouldn't be doing. You should be basing your decision on what the chart is telling you versus what your emotions are telling you. Oh, Stuart, that's hard to say. I use a simple example, and this is again trading full time. That there is absolutely no reason if you're concentrating on your portfolio on a margin basis that you shouldn't make 10% monthly if you're a swing trader. If you make 10% monthly, if you compound that over 12 months, that's a 312% return. Is this for a trading account? I would assume long-term account is a different percentage. No, I would still keep it as equal dollar amounts for that same reason, that you're not making your decisions based upon one position being bigger or smaller than the other. So return on risk and money, yes. Again, usually my money is 100% exposed. Now I say usually. There were times this past summer where the market wouldn't move more than one day in one direction and just up and down, up and down. There's a time where you just say, yeah, I can't make money in this market. It's got to be a really good chart to stay in. But what it comes back to, can you make 10% month trading stocks, and does it have to be options? Pretty much trading stocks. If you add options in there, you should be able to expand it that much more. So again, that's for the full-time trader. Is that what I do right now? Definitely not. I don't have time to trade full-time. If I did, nobody would hear me in the chat room at all. Is that 10% after the 30% losing trades? Yes. The whole process is the old adage, every money manager tells you to cut your losses short and let your profits run. The only problem is they don't tell you how to cut your losses short and let your profits run. Candlestick analysis has very simple stop loss procedures. And it's all, again, based upon common sense. Yeah, let's see, I don't have any more to do. Let me go through here. So the number one element that I do with my, to keep my emotions out of my trading is I keep each unit as an equal dollar amount. Now, a lot of people will say, all right, but what if you're trading options also? I might come back and say, all right, if this is my trading account, I might take one unit of $10,000 and make it 3 option trades. Well, now what do I have? Now I have 9 stock positions and 3 option positions, and it might even be that one of these option positions is the same as the stock positions. That's telling me that I've got to look at 12 positions. How long does it take to look at 12 positions each night? Probably no more than 2 minutes. And we'll get into that right now with Jim. I'm going to close this. Oh, so the reason we're doing this, let me point this out here. We are going to be doing an 8-part online workshop starting late January, which is all the elements for keeping your emotions out of your trading. Oh, and I've got the topics right here. How to take profits successfully, how to get over the stigma. A lot of people have a problem of entering a trade. They just freeze up. How you can use candlestick analysis to get through that. How to learn how to close a bad trade, which is one of the problems that most people have. They just hate to take a loss. But when you look at the common sense of, especially in this type of portfolio, that if you go with the rationale that candlestick signals work, or they wouldn't be around for the last 400 years, that if I'm looking at my portfolio and it's all positioned like this, and I look at this position and it's not doing what it's supposed to, more than likely, and let's say it's a losing trade, kind of creating a sell signal today, more than likely, 7 out of the remaining 9 are trading positive, 2 are trading flat, and 1's trading lower but not doing a sell signal. my overall portfolio is usually going to be positive every day. I don't know why it's fading in and out unless it's the servers. So anyways, there's going to be getting rid of the fear of executing a trade, getting through the emotions of closing out a bad trade, where to set your stops, how to keep your emotions out of knowing when when it's time to get out. And the whole process is going to be how to gain mental control over your trading, which is going to include improving your kind of your personal discipline. And the number one element that we tell people is you always have a journal to write down the good things and the bad things that you did every day. The reason we want to write them down is you can sit here and let me close this out. Whoops, and let me do this. I don't know whether I'm doing everything right here or not. Now I forgot what I was saying. That's just a fine howdy-do. The journalist. Okay, thank you. Let's see. Here's the special. Here's the early bird. We just want to see how many people want to be doing this. And again, it's going to be an 8 training session, which might mean there might be 4 or 5 hour sessions on a Wednesday night, and then maybe a 3 or 4 hour sessions on a Saturday. But what it's boiled down to is I get a lot of feedback saying, man, I see your charts. I'm finally making money, or I'm not losing money, but I'm just not putting money away. What do I need to do? And that's where kind of the emotional, how to eliminate your general fear of the market. So we're going to be going through a lot of aspects of the difference of your emotional trading using stocks versus options, getting rid of the influences of the intraday charts. So anyways, yes, thank you. If I didn't have you all here to remind me what I'm talking about, we would be talking about Snowman at this time. So how to take profits, how to get back into trades when it's time to get back into the trades. That was one of the big phobias I have is that when I get out of a trade, they start taking it down, I take profits, and take it back up. It used to be I never would get back into the trade. They weren't going to trick me into getting back in and then take my money again. So anyways, Jim, let me close this out, and I'm going to kind of demonstrate why having equal dollar positions help out tremendously when you're going through your daily or evening analysis. And again, your evening analysis should be a matter of minutes, not 30 minutes, 45 minutes, an hour and a half. It should be a matter of 2 minutes to decide what you're going to do with any of your positions the next day, and another 5 minutes to 10 minutes scanning to see what your best trades are for the next day. So it's a very simple cultivation process. And let me get to if your positions are not equal at this time, do you rebalance? No. There'll be positions where, obviously, if I buy $10,000 worth of this position, I just happen to have this up on the screen, and close out up here, well, now I've got a, let's say, $11,500 position. So if I can pretty much see that my total portfolio that started at 100,000 is now 110,000 based upon all the positions that are in it, obviously I reinvest this money. Instead of the 11,500, I invest 11,000. I've got 500 that I might add to another position that I might have come out with a small loss and go back into 10,000. The screen is blank. Peter, I don't know what to tell you there. Okay, so if I'm going through, and again, this is about the speed. Whoops, that's not right. If I'm in this position because of our J-hook pattern or our best friend signal, I can look at it real quick and say, all right, nothing wrong here. Go on to the next one. So I go down and take a look at my next position. All right, this one's doing what it's supposed to, coming out of the scoop pattern, nugget. Nothing here. And I can go down probably about, looking at these, stay long here, but I know that I'm in the overbought area. I'm starting to move away from the T-line. So I know I've got a good profit. I'm already up 25, 30% on this one. But I know what my indicators are telling me. I'm in the overbought area, moving away from the T-line. I'm starting to see a little bit of selling. I'm going to pick a spot and say, all right, I better put a stop right here. It shouldn't come back down through there. So already I've got a game plan for what shouldn't happen in one of my positions. Again, this all takes a matter of seconds. If I'd been in this one and it did this today, then I know exactly what to do tomorrow. I know that this has to open positive tomorrow to stay in it. If it opens lower, I close out the position. So I know that position number 2 and position number 4 may need some tweaking, while the other positions I've got, I can look at it and say, I'm still doing what it needs to be doing. This position's still doing what it needs to be doing. So this is about as fast as I need to go through to analyze, doing what it's supposed to. Now, on some of these, not even this one, but if I get up in the overbought area, I always put safety stops on to make sure that something doesn't slam it the other way. So more than likely, if I'm going through my 10 positions, probably 6, 7, 8, probably 8 to 9 of them are probably doing what they're supposed to be doing. Let's see. PA, doing what it's supposed to be doing. And if I was short a position, I was short Twillo and it did a bullish harami yesterday, I already knew that if it opens positive today, I was covering my short position. So essentially what this does is it sets up my planning for what I want to be doing. It also, out of the 8 or 10 or the 10 positions, if I've got something that now looks iffy, say, all right, this one has to open positive tomorrow to stay in it, or I close out the position. Now, when things, you look at your positions twice a day at the open and in the evening, pretty much, yes. When I get up in the morning, I can see where things are opening, see where the market is opening. And if I get up tomorrow, and let's say I own this position, and I could see that it closed at 24.07, and I'd already told myself if it opens lower, probably want to close it out, and I see that it's trading at 23.90, I know I'm going to get ready to close this position. Now, I might not get ready to close it if the pre-market futures are showing that the Dow is up 120 points on the open. I may let it open and then see what it does. On the other hand, if the Dow is trading down 60 points and this is opening lower, that's exactly what I don't want after a bearish doji sandwich. I'm closing out the position very quickly. Now, does that mean I'm not invested? No, this one might open lower, and I've already analyzed that something like this, Labu, might be setting up for our doji sandwich. So if I closed out that position and I saw this one opening positive, I've got some place to move my money to immediately. You always close out 100% of your position. Yes. Now, there will be times where I will close out half a position, and I was showing that in the room. Is it crazy to keep lowering your average in options? Lowering your average. Yeah, yes. The price of the option isn't what you're trading. You should be trading what the chart is telling you. Where is the best place or website to check how a stock is doing pre-market? Bob, if you've got a trading account anywhere, usually they have indicators where you can set up your portfolio, and it will show what it's trading even before it opens. Sam, I think this is because this is a different category. I'll have to check with Pat on that. Because this isn't a refresher. This is a whole different element. The 2-day course in January is on the signals and patterns themselves. Now, I think once you take this course, you can take it again afterwards as a refresher. Do you have pre-built scans? Yes, they're on TOS somewhere. All our scans or all our formulas are on TOS, NinjaTrader, Metastock, Thinkorswim. I think they're doing them right now for TradeStation, which is a little bit more complicated. So they're all over the place. And again, it's not rocket science. If you can say the signal or pattern, you can write the formula for it. Back to closed out position, 100%, sometimes 50%, yes. If I've gotten to a situation where, let's say we could see one of our parameters that we're moving too far away from the T line, I might close out half the position on this day, even though we haven't had a confirmed sell signal. The next day when it opens here, then I'll close out the other half. All right, so again, here's a situation where knowing what your pattern setups are, we know what a doji sandwich is, and we know the simple rule of the doji that if it opens positive after a doji, it's probably going to move positive. And if it's probably going to move positive, it's usually going to move the same magnitude as that day before the doji. So it makes for good timing. Somebody, I think, was just saying for option trades, your timing should be good or excellent. And that's exactly what the candlestick charts tell you, is exactly when to get in and get out of a trade. The 3T line is used, the further away you move from the T line, the more effective the 3T line. It gives you a little bit faster indication. So, all right, well, we've used up more time than I wanted to. So, anyways, that's why we're kind of pushing on the emotions factors, because too many people come back and say, I see everything, but I'm just not making money. So there's little tidbits that you want to know of. Again, moving, when is it time to start taking profits? And my problem, and again, you're getting a lot of education from what my problems were, which were many before candlesticks came along, is I would never get back into a position. I hated to take profits. Because if I had a good winter, I kept thinking, man, this is going to be my Dell of my lifetime and make me rich. So I'm not going to take profits because, boy, what if I closed out and they immediately took it right back up again? Boy, would I look stupid. Well, at least now I know what the charts are telling me, when to get in and when to get out. So we have the advantage based upon the individual sectors, we can see that the gold stocks are doing extremely well. So if I've got 10 positions on, and I know the gold sector is acting strong, I might have 2 or 3 of those positions in my portfolio in the gold sector. If I know that the oil stocks are working well, I might have 2 or 3 oil stocks in there. If there's a few others that are, I'm trying to think of one right now. I don't know what AVH does, but that's setting up nicely. So I might have another 1, 2, or 3 that are in the sector, but then I might have other stocks that I'm short. So again, my whole portfolio may not be 100% long because I want to have some, I guess, a little bit of hedging, but the hedging is based upon knowing which charts are selling off in an uptrend and obviously which stocks are heading up in an uptrend. AUs, yeah, we have that in our portfolio. Again, here's that scoop pattern. This is why the first elements of learning candlestick signals is the factor that investor sentiment works the same way time after time. And we know that because the Japanese rice traders identified where the strong reversal signals are. So out of the 50 or 60 signals, we've narrowed them down to 12 signals that occur often enough that you don't want to waste your mental time and energy trying to learn the other 40 or 50. If you just learn the 12 major signals, what that does for you is it allows you to recognize the strong reversal signals, and the Japanese rice traders also gave us the benefit of describing what created those signals. So as an investor, not only can you recognize when a reversal is happening, you also understand why it's happening, which kind of puts you in the same category as an investor that's been out there for 40 or 50 years of experience. How far along the scoop signal for AU would you wait to enter? Oh, you should be entered now. Notice what it did today. This is AU. It gapped up through the handle. We started buying down here with the anticipation. I mean, if you move this, you could see the handle and you could see the scoop pattern setting up. We were buying in here once it came up through the T-line. Then notice what it did. It gapped up. Now it's gapped up through the handle. So there's expectations coming out of a scoop pattern. And that's a strong slingshot effect to the upside. Now, does every single one of them work? Definitely not, but there's a high probability that they are going to work. So what tells you when they're not working? When you see a scoop pattern setting up, what do we expect for it to do? Have a slingshot effect in this direction. If it opens down here, what do? You close out the position because something changed that scoop pattern. I was on the 5-minute chart. Any advice on how to, you can use whatever time frame. This could be a daily chart, a monthly chart, a 1-minute chart, a 10-minute chart. It doesn't matter what your time frame is. If you always go back to the simple definition of a candlestick chart, it's basically the accumulative knowledge of everybody buying and selling during a specific time frame. And it doesn't matter whether that time frame is on a 1-minute basis or a 1-month basis. So the reason we're not afraid to come out of a chart, or I'm not afraid to come out of a chart anymore, even though it might not have done a complete confirmation sell signal with a sell signal and a close below the T-line. Again, the very simple rule of the T-line is if you see a buy signal and a close above the T-line, you can stay long until you see a sell signal and a close above the T-line. You stay long until you see a sell signal and a close back below the T-line. How do you use multiple time frames? if I'm waiting to see if this is going to execute, move in the right direction. Now again, there's a nice fry pan bottom, came out through the little handle or the beginning of the fry pan bottom and closed above the T-line. That's got a lot of running room. And what do we expect coming out of a fry pan bottom? A big, huge price move. Daily charts are different from 6 months? No. This could be a 6-month chart. This could be a daily chart. Looks exactly the same. There'll be a lot of times where if I get out of a position, if it confirms with another buy signal back up above the T-line, I'll get back in. Let's see. Let me see. All right, let me do this. Again, there's good chart patterns all over the place right now. Notice the bullish flutter kicker signal. Again, they opened here, closed here. They gapped up above the open of the previous day and then opened positive. So if you took out this little flutter, you basically have a kicker signal, which is the strongest of the 12 major signals. And what's patterns that telling us? Probably got a J-hook pattern. What is your upside potential? And this is everything we learned in our pattern training, is if this is wave 1, it should be the same magnitude for wave 3. Don, it all depends on what you expect the return to be. Let's see if I can figure out one. If I can see that if this was a fry pan bottom, if we were buying right in here, expecting a fry pan bottom when it was more right here, I can be buying here because notice our doji sandwich, which tells us we have more upside. So I'm not just buying based on this information here. This is the information that's confirming what the whole chart pattern is telling us. There's our wave or our J-hook type pattern. So we have a wave 1. Now we have a wave 2. Now we have a fry pan bottom going into wave 3. So usually, yes, you want to, if you can see the fry pan bottom, usually because the fry pan bottom is trading so indecisively, it's usually hugging right along the T-line. So again, this basically puts the probabilities in your favor that not only are you moving in a positive direction, but you're moving in a positive direction that probably has a lot bigger magnitude movement to it than just an uptrending stock and an uptrending market. If we can see this was wave 1, we can pretty much calculate what our upside is on this one as long as the market stays steady. Martin, that's what they are. There's 6 buy signals and 6 sell signals. That's a whole different, you usually see me explain some of those as we go through. Pretty much. Rick is saying it right, that if you just use the probabilities created by the patterns that human nature does time after time, there's our big bearish engulfing signal away from the T-line in the overbought area. That pretty much tells me the probabilities are that that was time to take profits. Now, do I throw away the chart? No, I keep an eye on it to see if it's going to do something like this, because what's our prerequisite for a J-hook pattern? A very strong price move. Stochastics are 1233. I'm a swing trader, and that was a sophisticated analysis of one night, probably 40 some odd years ago. I sat down and said, all right, what numbers on the stochastics kind of match with a peak of a chart and with the valley of a chart? I mean, 1233 has always seemed to work the best for me. Okay. No, we're not trading the moving averages, stochastics and both moving averages crossing. No, our number one criteria is the signals or the pattern. Everything else then is a confirming indicator. Is wave 1 from November 2 to December 2? Oh, I would say wave one is probably somewhere right down in here to up here. Yes, so if it moved 3 points, then we can kind of calculate that the upside potential for this one is another 3 points, taking you up into about 1360. And I think, oh, pshaw. Well, it'll make you want to kick your grandmother. I'm trying to get to the, that's not working out. Yeah, up here is kind of a congestion area. So if this is wave one, wave three should take you up into this area. Mark, yeah, unfortunately CQG is a very expensive. So if, let me go backwards here. What are your thoughts on oats futures? Let me get finished, I guess. Let me just finish up here with kind of saying that not only do you always have more trades than you're going to be able to handle, the benefit of candlestick scanning is it's going to find you more trades than you'll ever be able to handle. So from that point, it's now analyzing which ones have the biggest upside potential. Notice this one started, this big move here with your best friend signal, a doji followed by a gap up through the resistance level off the 50. This is what we call convergence analysis. The more pieces of evidence that we can put into our visual analysis that there's been a dramatic change of investor sentiment coming off a very strong candlestick buy signal puts us in a situation where the probabilities are extremely strong that we're going to be in the right trade at the right time. That could be the green flag trade. So here's another bullish engulfing after a hammer. Notice all the dojis. Remember, a doji tells you there's indecision. If you see that going on in an oversold condition, get ready for the trend to change. Notice how there was a downtrending channel here. Then we had a left-right combo, bullish engulfing after a hammer signal. This one's probably a good buy with the anticipation that if this is wave one, wave three should be of the same magnitude. Okay. Oats. I don't trade oats just because it's usually a slower. Let's see if I can do this. I'm not even sure. Oats is having a hard time getting up through this level. I would think that you probably have a better chart. I have no idea what that is. Better chart right now in wheat because it's broken this downward trend channel. I don't use Elliott Wave. Elliott Wave is too subjective, and I'm usually not in long enough to take advantage of wave one, wave two, wave three. I usually use a very simple wave one, two, and three. I'm trying to think of one. To me, this is wave one, wave two, wave three. Now, if I'm looking to get into this, if it starts back up doing a J-hook pattern, now it becomes wave one, wave two, wave three. Getting echoes. Hope you're not. Yes. Robert, that's the one thing I forgot to point out. Everything on candlestick charts is just common sense put into a graphic depiction. I see so many promoters of investment programs telling you they're going to show you a new secret of investing. There's absolutely no secrets in candlestick analysis. It's all taking the information that we all know that's common sense investment perspectives, and all it's doing is putting into a graphic depiction for us. Yeah, that darn raccoon can. Yes, the candlestick signals, if you look at them, they give you a heck of a lot more information than just a bar chart or a line chart. Now, I'll take a look at Amazon because this also gives you much more clarity to analyze what to be doing. For example, we can see that there was kind of a little wedge formation setting up. We were either waiting for it to break out to the downside or break to the upside. Well, today with it gapping up from a doji, closing above the 50 and above this that gives us and stochastics curling back up, that gives us a lot more information to say we're probably heading up. Dang, Jiminy Christmas, can't get rid of this thing. To a target. What's our first target? Probably fill in this gap right here. Now, is that a big percentage move? Not a big percentage move, but if you're a options trader, it makes sense. Not only does it make sense that if we can calculate this might be our target, and this is telling us we're probably heading in that direction, we can get a lot better leverage by setting up option spreads or an option spread on this, which reduces your risk but increases your percent return. I don't know whether anybody in here trades, and I say in here, during the day, we've got about 150, 160 people in the trading room. And the fortunate thing is, if you're learning candlesticks, it's a good place to ask questions. You don't have to reinvent the wheel or study everything on your own. You can ask questions. Secondly, we've got a couple, not a couple, but a good number of traders that have been doing this long enough that they come up with excellent trades every day just by scanning to see which chart patterns look the best. But Forex trades the same way. It doesn't have gaps in it, obviously. I don't trade Forex because I don't want to have to analyze two different currencies at one time. I can trade the dollar. Notice we had a bearish engulfing signal and gap down. Where's the likely target? Probably back here to the 50. If I want to trade the euro, looks like it's trying to break this downtrending channel. So I'd rather just trade the currencies in one direction, or just trade one currency at a time. Let's see. LNG. LNG has that J-hook pattern. So what does a J-hook pattern tell you? You had a good, strong price move. Then there was profit taking. Well, we can see when the profit taking is over. And what do we expect this next move to be? Well, if this is wave 1, wave 2, wave 3 should be the same magnitude as wave 1. Now, I don't trade Facebook very much because it doesn't have a chart that's really that compelling. You can see that the uptrend was extremely slow over here and choppy. Then they got slammed. Now what do you have? You got a wedge formation. So there's a lot of times where you can use the candlestick chart to tell you, there's nothing real forceful one way or the other here, where you can start looking at another chart and say, wait a minute, this one's got a lot of room to the upside because you're getting good, strong buy signals. Let's see. Are all these daily candles? Yes. But if I wanted to go and trade this intraday, there's your 10-minute chart. So your 10-minute chart can be trading. If I'm trading something intraday, I usually trade off the 10-minute chart. This is live cattle. Notice our evening star signal right smack dab on the 200. Tried to come back up, and did it get through the 200? No, it failed. And how did we know it failed? Because there was our shooting star, there was our doji, then there was our close below the T-line. That told us we could stay short until we see a buy signal. Okay. William, you can do whatever strategy. I tell people you can apply candlestick charts to whatever trading program that you're doing. It's going to make it that much more clear. Now, I do it the other way. My number one criteria is analyzing the candlestick charts and then putting everything else on as a confirming indicator. Right now, it looks like DGAS. Notice the shooting star failure. Notice the wedge broke to the downside. That's when our buying started. Where did they, if I was short, I would be covering the short, but notice what it's done right now. Shooting star failure of the T-line, putting us into a bearish J-hook pattern. So if this is wave one, where do you think wave three is going to take you to? Probably right down here to the 200. AP, yes. Yeah, mostly, yeah, when we finished off the PowerPoint area, again, tonight's session was mainly keep your positions the same dollar amount. Because if you've got one position, let's say you have a $100,000 portfolio and you've got one position that is 30% or $30,000, another position that's 20, two positions that are at 2,000 and 1,000, it's not doing you any good because you're not getting any, you don't know what the returns are based upon each one of your trades. You want to get into positions at equal dollar amount so that you know that position. Now, the reason I use 10 positions versus 20 or 4 is 10 positions, 10% of your portfolio. If if you have something devastate one of your positions, it's that position's small enough that it's not going to kill your whole portfolio. Hopefully, the other 9 positions have offset most of that blast of that bad trade. On the other hand, you get up to 25, 30 positions, and you know that each one of them is a very big portion of your portfolio, you're probably not going to spend a whole lot of mental time and energy analyzing each position, which means you're mostly trading what the general market is doing. If you've got 10% of your portfolio in each position, it's small enough that it's not going to kill you if something devastating happens, and it's big enough that it will have an effect on what your portfolio returns are by the end of the day. So you would definitely want to analyze each one. Again, it only takes 2 minutes each night to analyze what your positions are doing. Hold on to your individual stock requests. Let me get through all the general questions, and then we'll do some of the stocks. And again, when we analyze each one of the stocks, it will be based on what are the signals telling us what type of patterns are we in. Is this sessions are for portfolio management? Pretty much. Is this sessions are? I don't know what that question means. Yeah, kind of manage your, not so much to manage your portfolio, but manage your mental thinking so that you're not shooting from the hip. Yeah, is DGAS the inverse? Yes. So if it's going down, that means natural gas is heading up. Yes, it does work with trading Forex. Remember, candlestick signals aren't for analyzing a market. It is analyzing any trading entity that has human emotions in it. So whether you're trading currencies, stocks, bonds, commodities, tulip bulbs, it works on all trading entities. Should you always have a stop loss on a position? Usually I do, Stephanie. And it's, even if it's something that I don't think would ever happen. Let's see. Whoops. say I think I know what this is going to do, move up here. But where would be a place that would tell me something drastic has gone wrong? Well, probably back down below the low of today. If it came back down through there, what's that tell me about the trajectory of my expectation? It's not doing it. Get out of the position. So if I was going off to lunch and it was trading up here, I just put a stop loss right here. So if something drastic happened, I'm out of the trade. What's the SK and SD? These are the stochastics. One's your fast and one's your slow. But it doesn't really matter. People say, do you trade them when they cross? No. What we really want to see is just the logic that's built into candlestick signals. A candlestick buy signal in an overbought condition doesn't mean very much. A candlestick sell signal in the oversold area doesn't mean very much. What we're looking for is a candlestick buy signal in the oversold and a candlestick sell signal in the overbought. Why does it change with every chart? What, stochastics? That's because it's based upon the price movement of that chart. That's what the stochastics are. It's analyzing where you are in the trend in that chart. When is it too late to get into a J-hook pattern? There's two places you can get in. You can get in just as it started. In this case, it started with a doji sandwich, so we could be buying right here, knowing that if it opens positive after a doji, more than likely it's going to trade positive, which would continue to confirm. Or you can buy it as it breaks out through here. That confirms that now you're in the next wave. So obviously more profitability here, but a higher risk. It could fail up here. You have to get back out. Less risk if it breaks through, telling you you're now in wave 3. You don't use stop losses for options. I think most brokerage firms have a contingency order where, let's say I was in the options, which I am in this one. I could say, all right, if this stock comes back through 10.04, close out my option trade. Elsie is asking, if you get a sell signal, but you are not at the T-line, do you wait for a close below the T-line or immediately get out of the trade? Two elements. One, if you're right here and you get a confirmed sell signal, you close below the T-line. But remember our caveat. You can buy when you see a candlestick buy signal and a close above the T-line, and you can sell when you see a candlestick sell signal and a close below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. So seeing this doji type day up here, and it opened positive the next day, where do I not want to see it go? Probably back below the close of the previous day, because if it did that, what did it tell me? The sellers are still there. Where's my next likely target? They're going to come back and test the T-line. So a lot of this is just common sense of where you buy and where you sell based upon human nature. How long do you the position hold, and what role plays the volume? I can hold a position for 2 days or 10 days. I've got a very simple criteria. I buy when the candlestick signals tell me when to buy. I sell when the candlestick signals tell me when to sell. That could be I buy here and the next day I have to close out because that was a bad trade. But this is part of the when to take profits. A lot of people will say, man, I've already got good profits. Should I sell? Well, the answer is, if you took the risk based upon knowing what the price move should be doing, why do you want to sell just because you have profits? That's what kills most people, is they take their losses, and then when they get profits, they take those. And what's the fear factor? boy, would I look stupid if I had profits and all of a sudden it turned into a loss. Let's see. So anyways, I can hold anywhere from 2 days. I can even get out at the same day. If I was buying right here, because it was confirming, doing kind of a scoop pattern, and I was buying here, and it closed back here, I'd close out the position because it didn't confirm. Or X on that PS chart there. Both blue and red moving average are pointed north, and the blue crossed over yesterday. Is that a confirming? No, again, we're not trading the moving averages. It's just added fluff that things are moving in the right direction. The only thing that my concern is what is the pattern. Everything else is just then confirming indicators. Paul, I look stupid all the time too. I just don't tell people when I do it. Will you exit day before earnings? Again, candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. If they were going into earnings today and this chart looked like this, that means probably somebody that looks or knows a lot more than I do, much closer to the company, is buying going into those earnings. So I've discovered that every time I have a negative surprise, I probably have 4 or 5 positive surprises to offset it. Oh, it went below the T-line? No. Remember, anything during the day is just noise. So if I'm buying on that day and it's traded back down here, I give it to the end of the day to see what the daily signal is, not what it's doing intraday. Okay, let's see if I've missed anybody's questions. Again, the important factor of candlestick analysis is you don't have to be a rocket scientist doing analysis or doing numbers or analyzing fundamentals. That's all built into what everybody else has already done for you. We're just seeing what the results are of that analysis. And I'm trying to think of QHC. So again, there's our little morning star signal. So if you haven't had time to do the training sessions, there's our little inverted hammer. And bullish confirmation gives you probably about a 95% probability or greater that you're going to be in an uptrend after a confirmed inverted hammer signal. Also, notice the type of little pattern we have. There's your scoop pattern. What do we expect coming out of a scoop pattern? Slingshot effect to the upside. So the nice thing about candlestick analysis is it tells you exactly what's going on in investor sentiment. The T-line is the trigger for getting in and getting out. Yes. It's the number one criteria is your signals. The T-line is that added confirmation. Oh, Facebook, 5-minute chart. That's the 10-minute. That's the 5-minute. What's the question? 215 today was long. Sold before the move. Any advice? 215. I can't ever tell what the time frame is. 215, right about in here. Was long, closed out. It doesn't hurt you to have closed out if it was right up in here. Because you're right here at the 50. So if I'd done the same thing and closed out, then I just wait to see. I'd rather give up a little bit of profitability than give up some profits. $119.90. All right, so you've missed out on 70 cents. But it hit a resistance level. So that's another aspect. I would rather get out not knowing what was happening and then get back in when I see the trade confirming. Legging in on a position 1/3 or 50%. If I'm legging into a position, it's probably going to be as simple as half the position now, and if the signal keeps confirming, buy the other half. Because I don't want to spend all my time trying to execute the trades. I want to either be in the position or not be in the position, so that once I'm in, now I'm analyzing whether I want to stay in that position or get back out of that position. So CVI, Harry, did kind of a dark cloud, and then today closed below the T-line. I would have closed out the position because you can see the weakness coming in right about this level. Now, if you didn't close it out, your next criteria is it has to open positive and trade positive to stay in it. If it opens lower and starts trading lower, or opens higher and starts trading lower, close out the positions. That means the sellers are in control. This chart system is CQG. I don't recommend it. It costs me about $1,300 a month, but it's got good graphics and it moves quickly as far as these type of demonstrations. Okay, what I'll have Jim do is when he does the double line, you can type in any stock symbol and we'll go through it. What are the settings for the T-line? It's 1233. And in 4.8 seconds, Jim's going to do the next double line so we can get to them without watching the scrolling. And if I've missed your question from above, type it in again. Wouldn't only trading longs that are above the 50 FA increase your odds? No, because there's a lot of times where a market or a stock has moved way down and is way oversold, way below the moving averages. Remember, we're not trading the moving averages. We're trading the signals. The signals are the number one criteria for telling us when to be in and when to be out of the trade. Everything else becomes a confirming indicator. All right, try to go through these fast. Tiffany, with that kicker signal to the downside. Notice how it opened here yesterday, closed here. Today it opened at where it opened the previous day and went the opposite direction. Where do you think the next target's probably going to be? Wave 1, Wave 2, Wave 3, the same magnitude as Wave 1, should take you down to the 200-day moving average. So I'd be going short. U.S. Steel, nothing of any great consequence here. You can see you're still in the sideways mode. If you're long, you stay long as it doesn't close back below the T-line. If you're looking to buy, I would probably put a buy stop right up here, knowing that if it came up through there, now we're in wave 3 of a J-hook pattern. McDonald's, not a great trader only because the magnitude of movement, percentage move each day is not all that great. Even here, I probably wouldn't be long or short this stock. Just not a good stock to analyze. Plus, even if you got it right, it's not going to produce huge profits for you. Potash, if it opens positive tomorrow, you can get a quick trade expecting a doji sandwich. The same magnitude move tomorrow on positive trading as that day right there. So basically, you want to see what the pre-market futures are showing on the open, whether the market's staying steady. ARCC, another one that's kind of running into problems right here. If you're long, it needs to open positive and trade positive. If it opens lower, they're coming back to test the T-line, which means it's not a very strong chart anymore. Same thing with Medley. It needs to open positive and trade positive. It's still not a great looking chart. I mean, it's junky. You can't really see what type of trend you're in. Adobe, this one you can be buying if it breaks out through this little downtrending channel. You do have buy signals here. Stochastic's coming up. So right now what you're watching for is if they can break through the that resistance level. Apple we haven't been trading because there's really no direction to it. It might be doing a J-hook pattern. So if I was buying Apple, I'd probably have my buy stop right now at 118.25, knowing that if it came up through there that we're in wave 3 of a J-hook pattern. Northern Dynasty, Morningstar signal. Just make sure you got a lot of volume on this $2 stock, which I think it is as far as volume. You can buy this one on positive trading tomorrow and then just set your stop at a close back below the T line. You don't want to see it close back below that level. That would kill your J-hook pattern. Nothing great on this one. Yeah, I probably wouldn't be long or short this one right now. Just no direction to it. Even though you've had a little buy signal, it's not anything of any great consequence. INSEE, another one where you've got the buying coming in and you're right at this resistance level. I'd be a buyer on strength and making sure that it was staying up above the that resistance level. Kite, nothing here either. I mean, if you like it, you just have to watch to see what it does here at the 50, which also is coinciding with this downtrending channel. Another one that I probably wouldn't be going after. Oh, you're seeing a fry pan bottom. This is what we call the bobble. Notice how it came up, hit the resistance level, came back, and notice what they couldn't do. They couldn't close it below the T-line. So if you owned it and you took profits or came back out of it, you bought it back here because now not only do you have a J-hook pattern, but it's much more defined by the fact that it resisted here and supported on the T-line. Now your J-hook pattern's telling you probably your next target is the 200-day moving average. Oh, Mike, that doesn't look familiar. That one's not coming up. The oil fund, you can see how you're up in this area and you're starting, crude oil is around $53 a barrel. You can see how it's not going anywhere right now. You're caught sideways, which might be what's happening, is that crude oil has now finally reached a level of equilibrium and might just sit there for a while. Guild, you want to see this one also break out through this level. So if you are long, you need to see this open positive and trade positive. If it opens lower, they're probably coming back down to test the T-line /50. Tesla gave up some today, but notice the J-hook pattern bouncing off the 50 or the 200/T-line. Gave up some, but that's good consolidation. You can still buy this on positive trading because if this is wave 1, wave 2, wave 3's got a lot more upside. Chesapeake, nothing here of great consequence yet. Another one that I'd be more apt to buy on reaching this little downtrending channel. There's better oil stocks out there right now that I'd be in. CRR, probably Whiting. VVV, nothing excitingly wild here, just a slow uptrend. Oops, we just did CRR, we did O, CCJ. J-hook pattern breakout. Notice where they gapped up to today. You could see there was a resistance level here, and they gapped up to get, knowing that it was right there. That's a pretty good indication that you're going to go much higher. So you got wave 1, wave 2 consolidating, going into wave 3. Let's see, we did ACAD, another one that want to stay long as it stays above the T-line /200. Notice it came back down and used the 200 as support. I would suspect you're coming back up to test this level. Did we do this INSEE? This one, Notice you've got a doji right here at the 50, so it makes it very simple. If they open it lower, they've failed at the 50. You close it out. If it comes up through the 50, you can be buying it. We did U.S. Steel, I think, or did we? Halo, gap up through the resistance level. Notice your little kind of cradle pattern down here. Then a gap up, that tells me might be in another run like this. Yeah, U.S. Steel needs to get up out of this area. AK Steel, same thing. Notice coming out of your fry pan bottom, this is what we call the classic pattern. Kind of a big fry pan bottom. What do we expect coming out of a fry pan bottom? A very strong price move. Now notice how there's consolidating right in here. If they break out through this level, now we have a J-hook pattern. What's the prerequisite for a J-hook pattern? A very strong price move. So that's why we call it the classic. Classic fry pan bottom breakout, consolidation, and then the next wave starts. GDX, just like the gold miners, you stay long on this one. Right now, I'd be looking for the 200-day moving average as the next target. EFA. Don't even know what that is. ETF. Still don't know what it is. But I would stay long right now until you see a sell signal. The Qs, you can see, are still above the T line. So as long as you stay above the T line on the NASDAQ, you're going to have a continue in the Qs, you're still going to have an uptrend. Again, a very simple rule. Your uptrend remains in progress as long as you're trading above the T line. That's just great. I scrolled all the way down. Don't even know where I went. Okay. CYH. You can get ready to buy this one on positive trading tomorrow. Your doji sandwich, you can see the fry pan bottom breakout. You're right here at this level. If they break into this area, you don't have any resistance until you get up to the where they had the gap. Pilgrim's Pride, stay long. Nothing wrong there. Halliburton, not anything wild and exciting. You're just in a nice, slow, steady uptrend. Same with Schlumberger. Do you ever trade longer term on weekly? If author, depending on what your time frame that you're trading, if you're a longer term investor, yeah, use a combination of the daily, weekly, and maybe the monthly. If you're a scalper, you use the 1 minute, 5 minute, 10-minute combination. So it all still is based upon the investor sentiment during the time frame that you're trading. FTNT. You can be buying this one. Not a great looking chart, but it's heading in the right direction. This is what we call the T-line crunch. Notice how they couldn't close below the T-line, and the T-line's crunching it up through that resistance level. HIMX, just stay long on this one. Expectation is here at the 50, kind of confirming that downtrending channel. Cork, another one where right now you can get ready to go long on a positive open tomorrow. You can see where the bullish engulfing signal occurred, right smack dab on the 50. You observe the obvious. Every time it hit the 50, we had bullish signals. Now if it opens positive tomorrow, you've got the potential of a doji sandwich, which means you can already calculate the magnitude of the move that we'll be setting up for tomorrow. The Russell got a little bit soggy today. I'm surprised it's that soggy with the NASDAQ trading positive. But another one where you want to see it stay above the T-line and then break out through this resistance level. You can see the J-hook pattern here. Now look for the bigger J-hook pattern. Oh, boy. Let's see if I can get copper. No, that's Canadian Pacific. FC, whoops, CP. All right, this is the March copper. Starting to come up. There's your left-right combo in the oversold area. Big, strong move. See what happens? And this is another thing what we teach in our training. Where do most people buy? They buy exuberantly at the top. So anytime we see a gap up in the overbought condition, we get ready to take profits. Now you've got a left-right combo, a bullish engulfing. You can be a buyer. If I was going to buy tomorrow, it'd be above this level right here, above the highs of the last couple of days. CARR. Oh, that's not working. CARR. Ah, no. Bank of America. Getting a little bit soggy up here. You can see the bearish engulfing, but you can see the little scoop pattern. At this point, if you're long, you don't want to see it close back below the T-line. If you're going to go long, I'd wait for it to break out through here. That's your J-hook pattern again confirming. ENB, stay long. It's trying to break out through, it broke out through this little level. Now watch, see if it breaks out here. You can see the wedge. Now it's breaking out to the upside. Alcoa, not a real good trader. Obviously an institutional trader. Not a chart that I'd try to make any money with. Nothing there. EGY, J-hook pattern. You can be buying this one. Just make sure your volume is good. Is that YY? Bullish engulfing. If you're buying on positive trading, make sure it breaks this downtrending channel. So you know where to watch. I say you know where to watch. Once it gets up to this level, I want to see what type of signal it does. If it does another shooting star, it tells me they've failed. You were still in a downtrend. It, stay short. SIG, get ready to go short on weakness tomorrow also. Bought AGI 7 days ago. Don't want to wait for a return to the T-line to collect profit. Suggestion. Yes, pick a spot. You're now getting up in the overbought area, but you've hit this resistance level. Getting close to it. So pick a spot where it shouldn't come back to, which I'd pick a spot like right here, halfway down that candle. If they had enough selling energy after failing up here, I'd take profits at that point. Now, you might say, all right, that's given up a little bit of profit. I'm not trying to sell at the exact high, and I'm not trying to buy at the exact low. I'm trying to catch the high probability fat part with high correct trade ratios, because that compounding effect will be much bigger than trying to squeak out the tops or squeak out the bottom. FAS, I'd be ready to buy this one above the high of yesterday. Notice the little scoop type pattern. So you've got wave 1, wave 2 with a scoop pattern slingshot trying to take you higher. Panera Bread, not real exciting until they can break through this downtrending channel. McDermott, Medtronics. Right now, you can see they can't get up above the T-line. You stay short. Now, if I had been short, I would have covered it here. But now I'd get ready to re-short it because they've proved that they're not getting up through the T-line just yet. And CAFD also wouldn't do anything with this until they can get up through the 50, because that would tell me they've broken this resistance level and broken the 50. There's a wee little gap up here that would be the next target. Oops, I went backwards, didn't I? Hack. For some reason not coming up very fast. I'll try it later. Starbucks. Starbucks I've never traded because it doesn't have a whole big magnitude of movement. And I probably wouldn't even buy it now because you don't really have any great reversal. You probably just have a pop to the upside. I'd be trading something else. The 20-year notes showing bond prices heading up, which is unusual. I would have thought with more activity in the economy that the rates would start heading up, bond prices going down. Coffee, as you can see, has gapped up a couple times. This is the fund. It's starting to head back up. Watch to see what it does at the 200. There's a wee little teeny gap here. There's gaps up here. Next target, I would think, would be up at the the 50-day moving average. How did I do that? Nugget, stay long. I would anticipate it's coming back up to at least this level. There's also a gap up here at the 200. SSO, right now, to stay long on this one, this is the Ultra S&P, still looking for the same thing, waiting for it to break out through this upside. Do have that little scoop pattern that's starting with that bullish flutter kicker signal, which means the probabilities are there's more upside. USO, the crude oil stuck in this range. Shake Shack, notice the best friend signal, gap up. Now you kind of broke through this level. Stay long until you see a sell signal. Also, a wee little teeny gap right in here, so you've got a little bit more upside yet. MNTX, J-hook pattern with a kind of a flutter or a doji sandwich. Strong price move, consolidation, and notice where it consolidated to, right smack dab to the T-line. When I say notice where it consolidated to, nobody has the T-line, or very few people have the T-line on their charts. They have the 200, the 50, and the 20. That's why those act as targets. Everybody's watching them. Nobody has the T-line, so that acts like a natural support and resistance level of human nature. So if you combine the factor that the candlesticks are the graphic depiction of human nature, and the T-line is kind of a natural Fibonacci support and resistance level, you combine those two, you've got a very powerful view of what's going on in human nature. BRTX, you can be buying this one. I just be careful. It's not a great chart, but it's heading in the right direction. I just watched to see what would happen at the 50. Clovis, that's a nice J-hook pattern. Notice the big hammer signal followed by a bullish engulfing. If they break through here, at least you got this type of price move. Square, started putting some money back in Square because of another J-hook type pattern setting up. There's wave 1, wave 2 going into wave 3. Upside target for Nugget. Did we do that already? I would suspect getting up pretty close to this area. That's because gold gold is starting to come back up. Notice how it broke this downtrending channel. This was election night. Gold, big shooting star doji, continued its downtrend. Now, more than likely, the first target is going to be the 50-day moving average. CNAT, nothing yet. Again, when you have a big move like this, if it opens lower the next day after a big profit, I close it out immediately, just in case this is happening. If it opens and then starts coming back up, I'll buy it back. So I've given up a little bit of profitability, but I know my direction is still that the buyers are still there. And PTLA, J-hook pattern, another one you can be buying on positive trading tomorrow because that would give you a doji sandwich, J-hook pattern breakout, a high probability trade setup. That one's going to get a little star next to it. So if you're an option trader and you wake up and you can see that they're opening this positive and the market's relatively flat or up, that's a high probability quick trade for an option trade. Let's see, what do we got here? PHMD. Nothing exciting here, still caught in this downtrend. If you're long, it has to open positive tomorrow to stay in it. Did we do Shake Shack? Yes, the gap up, breaking out into new territory. When you look at a trend breakout by comparing the current candle to the previous top or bottom candles, do you take into consideration the shadow of the candle or the body? Mostly the body, but we'll still look to see whether the shadows, notice that shadows on this one, there was 3 of them. So that becomes, the bodies aren't that much of a concern because they aren't very big. It's where the top prices were. Now it looks like they've broken through the top prices. So it's a kind of a function of how many big shadows were the upside. Now, if there was a huge move to the upside and it came back down, usually they'll eventually go back up and test that high. It might take 2 or 3 weeks or 2 or 3 months, but they'll try to get back up to that high point again. TFM, the 3 leveraged 20-year note. I didn't even know that one. Watch to see what it does here at the 50. What did you do with Twillo? It opened up and closed down. How do you read that? It's telling you that if you were short, would have covered the short on the positive open, but you can see they haven't been able to get back up above the T-line. So I'd still be ready to short this if it started coming back, especially if it came back down through the halfway point of the bullish harami that told us the selling had stopped. So if you're short, stay short, but it better open lower tomorrow. Quad, nothing there. You're sideways. If you're doing anything, you're short, but there's not enough percent move. It looks like you're just in a sideways market. If it trades below the T-line intraday, would you stop out? It depends on where you are. Let's see if I can find an example. Like right here, if it trades down below the T-line, yeah, if you're not that far away from it, I'd still wait to see what it does by the end of the day. Now, if it's here and starts trading down below the T-line before the end of the day, yes. The fact that you had a shooting star in the overbought area and gap down, I'd definitely be closing out the position. IRTC, all you can do is stay long, but you need to see it stay above the T-line. Just opposite of Nugget, stay short. What that is. But notice that they're still taking this one down. If you're short, stay short, but I'd put my buy stop at today's open. Anytime you see a gap down, be a little bit more leery that might be the place that you're that was the last gas selling on the way down. Goldman, nothing here. So here's another case where if I was long Goldman, somewhere in here, when it showed that they weren't moving anywhere, and you lost your analysis of whether it's going up, down, or sideways, I would have closed it out. But what would I expect? Something like this, which means I close it out because I don't know whether it's going up, sideways, or down, but I put a buy stop up here, that if it comes up through here, I know that wave 3 has started. Once again, I'd rather give up a little bit of the profitability, but dramatically improve my probabilities it's heading in the right direction. Netflix, all you can do right now is stay long on this one. Disney, not a trader, just a nice steady eddy. Come on, come on, come on. There you go. I would just stay long on this. Coles. Do we pay attention to volume of a trade? No. Usually the volume is already built into the scan. I don't want to trade stocks that are trading less than 200,000 shares a day on average. Now, if you see a big reversal signal and big volume, yeah, that tells you there's been a lot of change of ownership. That bullish signal probably is telling you something. Same scenario up here. If you see a bearish signal and big volume or big volume spike, probably been a change of ownership. Now, a lot of people say, well, I want to see volume go up as the price goes up. Volume and price have absolutely nothing to do with each other. If you've got a stock that's going up and nobody's willing to sell it, it's going to go up on lower volume because people are paying up for paying up for it. So we're not buying volume, we're buying price. Tesoro, nothing wildly exciting here. You can see you've got this resistance level. I'd pick a spot like up here telling me that they've broken out to the upside. You use this time frame only? No. If I'm day trading something, I want to see what the daily chart looks like first. So I'll use that as my criteria. What did I just do? Did I do Coles? Whoops. I bought a call today because of the weekly trend line. Well, remember, your kicker signal is one of your strongest signals. And the longer you go out on your charts, yeah, that to me, there's nothing there. Don't have a sell signal, but a lot of selling. And right now, that's not what I wanted to do. Right now, it kind of breached the 200 and this support level. I would suspect there's more downside. Remember, the bigger the signal, the more compelling there's been a change of investor sentiment. Oh, I don't know how to get to the Aussie dollar on here because I've never traded it. It doesn't move around fast enough for me. TLT, buying this if it came up through the 50. Is it too late to buy Nugget? No. Remember, Nugget just gapped up through the handle. Expect that slingshot effect. Remember what we're expecting coming out of a fry pan or of a scoop pattern. That slingshot effect. Western Refinery stays short. You can see it's had a hard time. Where's the next likely target? Probably the 50, which would coincide with this low right here. Do you use buy stops or buy stop limits? Buy stops. Because if, let's say I wanted to buy Nugget tomorrow, closed today at 10:32, and I wanted to buy it at 10:38, and it gaps up to 10:40 and heads right on up without me. I wanted to see it open positive and trade positive, and for 2 cents, I lost thousands of dollars because I put a buy stop instead of just a buy a stop limit instead of just a buy stop. Let's see. Do you have a list of stocks that you like to trade or deliver positive results? Sam, I put out 2 or 3 stock picks every day in the members area. Again, not so that members have picks, but so they can analyze the video of why it's being bought. But we're more interested in teaching people how to do their own scans so that if the picks that I happen to pick that look good to me on any given day because of their charts didn't execute or open properly. We had one today. Which one was it? RDN. RDN was setting up as a nice J-hook pattern. So we wanted to buy it on positive trading. Well, it opened here and didn't execute. So if you were waiting for that to be a pick versus going out and finding what other stocks were moving well, you'd been out of luck. A lot of them were moving well, obviously. JNUG, same as Nugget. You could still be buying this one because of the scoop pattern. And notice the doji gap up. Tells me there's probably a lot more upside potential to this one. Monster, not a wildly exciting stock. You can see the fry pan bottom. So right now I would just stay long as you don't see a sell signal. How do you minimize commissions to the platform provider providing? How do you minimize commissions to the platform provider buying large quantities? Oh, If you're trading a big account, you negotiate your commissions with them. Oh, damn. Crude oil is kind of in this flat trading range. If you're trading it, I would stay long as it doesn't close back below the T-line. But right now, it's nothing showing us any great movement. Amazon broke out of the wedge. You could be buying this one on positive trading tomorrow. Orex, big breakout. So anytime you see that indecisive and you see him break it out, and notice the volume did pick up a little bit, that's when you get ready to buy. That told you after all this indecisiveness, they've become decisive. See, we did Shake Shack, Whiting, stay long on this one. I'd be a buyer of this one above today's high, which would tell me that they've broken out through this range, that we're in our next move. G-Pro, you could be buying this one. It's still going to be a fry pan bottom, so I'd be more apt to buy it at 10, knowing that it got through the 50-day moving average. CVS, nice reversal today. It was trading lower today, but now came up. You can see the fry pan bottom breakout. That's a good, strong chart on positive trading. MYHI, nothing. MEDH, nothing there either. They those pink sheets. VRX, another fry pan bottom. You can be buying on positive trading tomorrow because that doji sandwich, if it's the same magnitude as this, you know what your target is. Probably coming out right up to the 50. Macy's got whacked like a lot of the retailers. If you're short, you stay short. Notice how you had sell signals. There's your bearish engulfing followed by a gap down. Anytime you see a candlestick sell signal, especially in the overbought area, followed by a gap down, that tells you not only has the signal told you what's happening, but told you that's happening with a lot of force. There's your little evening star signal. So you stay short until you see a buy signal and a close above the T-line. But remember about our T-line. The further away you move from the T-line, the higher the probability they're going to come back up and test it. So if you're short, you put your buy stop at today's open. It shouldn't come back up through that level. We did the Russell. Okay, EFA. All right, thanks, William. Is there something that you'd recommend checking that shows the relationship between futures, Dow, that are up and down, or overseas markets up or down, or how it correlates with North American market going up? Nothing. Nothing. I'm not trying to analyze what the market is doing based on everything else. I want to just analyze what the charts are telling me the market is doing and take advantage of that using, I'm not trying to analyze whether the market's going up or down. I want to analyze whether the market is going up or down until we've seen a buy or sell signal to reverse it. So try not to overcomplicate. IRTC needs to open positive to stay in it. Do I trade FAS type stocks? Yes, depending on which sector is working well. Right now, we're in, we bought the Nugget calls. Dang. Bought the Nugget January monthlies, the 10s, for 95 cents today. With the anticipation this could pop back up to test this level, taking that 95 cents up to about $5. Now, if we get a little bit further along, that's when we start looking at doing some spreads. Yeah, I think we did Guild, we did Goldman. Charles Schwab, nothing exciting here. Just stay long as it stays above the T-line. SSRY, another one that silver staying good. Whoops. This is silver wheaton, another one that can be bought. EXK. EXK, you stay long. Just watch to see what it does, trying to break out through that level. I don't have the Forex symbols up here right now, but right now you can see that the dollar is heading down and the Japanese yen is heading up. So I'd be a buyer of the yen, a seller of the dollar. Ford moved up nicely on this, keeping their factories here in the U.S., but there's a big bearish engulfing signal. So that's telling us they're having a hard time getting through this level. If it opened lower tomorrow, I'd close it out because that tells you there's no direction in Ford right now. Goog not a great trader because of the lack of magnitude of percentage movement, but you can see that they've broken this little downtrending channel. I would suspect there's some more upside, but it's not a real good chart. And CHKP, be ready to buy this one on positive trading, breaking out into new territory tomorrow. TNX is not working. Did I do that wrong? That one's not working. And NVIDIA is still in a downtrend. Notice the big bearish engulfing signal. Where do most people buy? They buy exuberantly at the top. So when they gapped it up, that was a good indication it was time to take profits. Notice what they did the day before. You're in the overbought area. Remember, the basic of Japanese candlestick graphics is they show you where most people buy. They buy exuberantly at the top. So when you start seeing gap ups in the overbought condition, start looking to take profits. What role plays? The 20 usually works a lot better when the trend becomes more consistent. They don't get back to the 50-day moving average. They'll ride along the 20. It's not as prevalent as the 50 or the 200. Costco, that's a good-looking chart. You can buy this one on positive trading tomorrow. ANET, another one that if it opens positive tomorrow, you've got the doji sandwich breakout taking you up into new territory. Let's see, we did this one. Steel Dynamics, same scenario. A positive open tomorrow is also a doji sandwich breakout. ARGS broke out through this level. Look for it to go to the 200. GSK, nice slow curve breakout. I would just stay long. Now that you're in the overbought area, you just stay long, but you put your sell stop right here at today's open. It shouldn't come back down through that level. And CTL, after your kicker signal, expect a 45-degree. Nice steady uptrend. Same moving average on the 5, 10-minute chart? Yes, they're all the same. So you could be looking at a 1-minute chart right here or a monthly chart. They're all the same. At what point in the first hour of the day do you change your trading position, especially after the market opened up and then reversed to trade down like they did today? Again, there was lots of stocks. There was a couple. Which one didn't execute? Was RDN. That one didn't execute because it needed to open positive. Now, if something opens positive and then closes back below the T-line, I'll close it out. Sometimes that's 45 minutes, sometimes 10 minutes. Okay, let's call it a night. voice is running out. Let me see if there's any questions. How can I find stocks that are creating your setup? There's very simple scans. All our formulas are right on our website. You can copy and paste them. All our formulas are in most of the scanning softwares out there already. Ninja Trader, Metastock, TC 2000. Can you point to something that explains anything? Because prices move in waves. That's the basis of the Elliott wave theory. Usually wave, wave, wave. You consider a close, a candle, some above and some below the T-line, still good close, and watch the next day open. If I see something close just below the T-line after it's had a strong move, I'll give it the benefit of the doubt, but it has to open positive the next day. Kohl's, yes, is a failed best friend. So if I probably wouldn't have been buying this because I wouldn't have discovered this was a best friend signal until after the close yesterday. So my criteria today would have been, if it opened positive, I want to be buying. So I'm not trying to buy anticipating the signal. I'm buying based upon the signal. Oh, I don't know whether I could get FXAH7. What does that do? Nah. Sorry. This has been recorded, and poor Jim has had to record for 2 hours now. Any thoughts on the new trading platform, tastyworks.com? No, I don't, Terry, but that's a good, the trading room is a good place to ask that because there's people out there that have experienced it. I'm like an old dog with no new tricks. All my things are set up, so I don't have to test new things. The guys who develop Thinkorswim, okay, all right. When you go long with options, and when do you enter a position? Do you stay with a long call or debit spread, then after it has made a fairly large move, will you add to the spread later or take it off? It depends, and that's our option when we've got the separate option trading room, so that's why we have that one for talking those strategies. But if I've got something, for example, we did the NVIDIA calls. Right here, I was buying the, I think they were one of the January weeklies. And I think we were buying the 99s for $3.60. Well, when we got up here, because we had the gap up, we sold them out at $18.10. But I didn't know whether they were going to continue to take this right on up. So I closed out the calls and then took less money and put on spreads, which meant I didn't have as much money exposed. So when it reversed, I had most of my profits. I had a little bit of money left in it that if it continued higher, I was still happy. If it reversed, I came out with a much smaller loss. Okay. Wanted to stress that there's a lot more coming up with the keeping the emotions out of your trading. I think if you start going through that, if you know the candlestick signals and patterns, and then you start controlling your emotions, you're going to be in a situation like myself, once being the worst investor in the world, that you start controlling. You have control of your own trading strategies. You don't have to depend on anybody else. That's right. Jim is still running on that treadmill, keeping things going. All right, everybody. We'll see you bright and early tomorrow morning in the chat rooms. We'll see you then.